So today was a pretty remarkable day in the markets. A lot of mainstream people that I saw on Twitter, folks who I follow who are not political or who are not, financially minded at all, I've been talking about the price of oil and the oil market. And that, you got to know it's a pretty big day if it makes it into normie Twitter. And so what happened today is that for the first time in history, oil prices went negative. I've talked about negative interest rates on this channel and how, central banks can try to suppress interest rates to the point by, just creating so much demand for bonds that yields actually go negative to the point, to where if you're holding a bond, you're actually losing money. You have to pay money in interest to the debt to your debtor. And today in the oil market, we have a very similar situation that people are so desperate to sell oil that they are going to pay people to take oil away from them. Now, it's not as crazy as it sounds because if you look at actually the price that was going down, if you look at West Texas Intermediate, which is what most people quote when they're talking about the price of oil, this is for a futures contract. Okay, so this is not the price. This is not like you go down to Walmart. I was going to say Wally World, and say, hey Joe, can you sell me a few barrels of oil? And they pull it down off the shelf and they go, here you go, and then they hand you $20. That's not how this works. They're not. You can't go to a store somewhere and the guy pays you to take away the oil. The reason why the price of oil is negative and they're paying people essentially to take it is that there's a backup in the supply chain. And these contracts, these futures contracts, were scheduled to be delivered tomorrow. This contract is about to expire. And actually, I should explain real quick. The way a futures contract works is that, I guess let's take corn for an example. Let's say you're a farmer, and you don't know what the price of corn is going to be in the spring. So, but you know that you're going to harvest at that point, and you want to be able to sell some of it. Now, the price of corn may go up in that time, but it also might go down. And just to make sure that you know that you for whatever reason, if the price of corn crashes in between, you want to be able to know that you're going to get a decent price for, let's say, 40% of your corn crop. So what you do is you sell today a futures contract to deliver corn to someone in 6 months. And in doing so, you, the farmer, you, the producer, the person who writes this futures contract, are able to lock in today's price for some time in the future. Now, in the meantime, though, it's likely that not one person is going to hold on to that futures contract for the whole period until it matures. Or expires, depending on how you look at it. What they're going to do probably is trade it. And this is going to get traded back and forth on the open market, just like a stock. And most of the people who buy this futures contract are doing it, for speculative purposes. They're looking to speculate on the price of this commodity. They're not necessarily looking to actually buy this commodity. They don't intend to take delivery. And so what tends to happen in the futures market is that at the end of whenever the period that this contract is going to expire, and whoever's holding it is going to have to take delivery, investors and speculators will sell this contract to someone who actually does intend to take delivery of the commodity. And this normally goes off without a hitch. Well, this time, the problem. The problem right now with oil, what came, is that essentially we got to the end of the month, and the contracts. Well, actually, it's not quite the end of the month. But anyway, we got to the point to where the futures contracts are about to expire, and whoever's holding these oil futures contracts are going to have to take delivery of the oil. They're going to have to pay for it, or they've already got the contract. They've paid for it. They just have to take the oil and put it somewhere, because that's what the contract is for. But like I said, most of these people who hold these things as invest these hedge funds and things like that, and investment firms, investment banks, whatever, they hold these things as a speculative asset. So they don't actually have anywhere to put this oil if they end up holding on to onto this contract until it expires, and they're forced to take delivery. They have nowhere to put the oil. because of course, they're in finance. They're not in the oil business. They don't own any gas stations or a refinery, where they could process the oil and sell it. And so, but today, what happened when all these guys, all these speculators went to try and sell out of their oil futures contracts, they found that nobody who's actually in the oil business was buying today. And the reason for that is because there's been so little demand for oil relative to the amount that's being produced, that everyone who can store oil has been buying it up at very cheap prices. And they're full right now. There's nowhere that you can store your oil. And so what happened today is all these guys tried to sell out, but there were no buyers. There were only sellers. Nobody can take this oil. And so they had to start, offering up these oil contracts at a negative price. They have to literally pay people to take away this oil and accept delivery for them. And so, in that sense, you can look at this if you want as an isolated incident, because it's a one-time thing. It's only because oil was so, is so backed up in its production and its consumption to where all of the storage facilities are full to the point to where nobody can accept delivery, that these particular contracts, these particular futures contracts, simply had nowhere to go. And so this wouldn't happen if, say, over the next month, oil consumption rises and all of the oil that's in storage right now, ends up getting used and then makes room for, the oil that's going to be delivered next month at the end of, the next period, to come in and move into that storage facility. But as a lot of people are figuring out right now, that's a big if. Because with the global economy shut down, there's no telling when all of this oil is going to be consumed. And meanwhile, the oil companies are still pumping the oil out of the ground. And so it's quite possible that the next month, when the futures contracts expire, the same thing happens. That at the last second, or maybe over the course of a few days, you see all of the speculators trying to get out of the market and being unable to find any buyers. And it's not like the oil companies can just write less futures contracts, because I don't know how many months out they write these contracts, but these contracts that are expiring now were written a long time ago. And so there's a backlog now of an abundance of futures contracts that were written, contracts to deliver a certain amount of oil that is inevitably much higher than what the market's going to demand in terms of the supply of oil. And so I think that what's going to happen is that you're going to continue to see this overflow of the oil storage facilities, because there are already, so many contracts to deliver so much more oil than anybody needs. So what this means is that for the oil companies, they're not really going to be able to sell any new contracts, because remember, whatever the price of this current contract going negative, it's not like the oil company is paying anybody to take this oil away. The oil company sold the oil that they're delivering tomorrow whenever they wrote the futures contract. So they're doing just fine on this particular month. But the problem is that because they sell things so far ahead, if they went to try and write a futures contract today, the oil company would have to write that contract at or below $0. They would not make a penny off of contracts that they're writing today. Or at least potentially. That depends, of course, on the sentiment of the people buying the futures contracts, because, of course, maybe the speculators will be speculating that oil production or that oil consumption will be back up, in a few months, and so they are happy to buy up a futures contract for oil to be delivered at that point in time. But we simply don't know. I mean, certainly they're not going to be looking to buy oil at a particularly high price, certainly not a price that North American oil companies, for example, are going to be able to turn a profit with. And we've had that problem for quite some time now. That was right when the whole initial market crash started. Was the day that oil companies started rolling over and going bankrupt. And so things have only gotten worse since then. For the oil companies, of course, and for the rest of us. Because remember, the reason why nobody's using any oil is because nobody can go anywhere, nobody can do anything. Oil fuels our economy, and when our economy is shut down, we're not consuming any oil. Now, I don't see this really as causing any more systemic problems than it already has, because this is just a side effect of of the Wu flu lockdown and all of that. Because a month ago or so, I was talking about how the oil company's going bankrupt. That could start a financial crisis. Well, we're already knee deep in that anyway. So more oil companies going bankrupt isn't going to really do any much worse. I mean, they're going bankrupt for the same reason that everyone else is going bankrupt. This is not a problem that's specific to the oil industry anymore. This is a problem that's specific to everyone. And so, as I pointed out, was it yesterday already, or maybe a couple days ago, when I was talking about how these companies are still going bankrupt despite the Fed buying up all the bonds, because no matter what you do to try and fix the price of assets, the economy simply is not alive, and these companies can't survive if there's not any economy. It's the same thing here. People were making jokes all day. Oh, when's the Fed going to start buying oil futures to try and prop up the market? Because there's nothing. The joke is that there's nothing the Fed can do. They can buy up all this paper if they want, but the Fed can't take delivery of the oil either. There's nothing anybody can do to salve it, to keep the price of oil higher. And so this is just another reason to believe that we are witnessing the end game of our phony economic system. Our economy, built on confidence in the Fed to make everybody feel good, simply cannot survive this way. So with that said, if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do subscribe, because I do upload every day and I'd hate to have you miss one. So I'll see folks back here tomorrow.